Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, February 24th. As you can see, markets in a range yet again. This is only 3 days, but I can go back and you could see for the most part of February, I think other than a few days, the first week of the month, we have gotten no volatility and we have gotten no movement. We have just been staggered here. There's a little bit of price action like we had here where the markets went down. They based and then they rallied for 25 minutes, a couple of hours maybe, and then sideways again into the close. And you could see this little pop up and they make new highs. Pop up, they make new highs. But this is just absolutely horrible price action, and this is where the market shakes out all of the weak traders, right? This is where the markets say, okay, let's chop this around. And when I mean by the market, I mean all of the big players. We're waiting for something for this market to break out to the upside and or to the downside for that matter, right? Because we've been kind of range bound at the upper end of the range, which is bullish. But this is where all the weak traders, they start closing their accounts, or they're getting chopped up because they want to continue to trade. They're not allowing their own system and their trading style to let it work for them and managing their frustrations. So this is where when I say cash is a position, trade minimally if you have to. This is why, and this is where all of the weak traders, and then when the market starts to move again, the traders that were getting chopped up into this is now having to make their money back. Okay, so that's why I understand it's very boring. I'm the first person to say it, but sit back and wait for the price to tell you which way we're headed. Okay, obviously right now we are still in a bullish trend. The weekly charts look fantastic. The monthly chart looks great. I mean, they are overextended. But at least if we can get a break to the upside, we could see probably 2135, 2150 in the ES. So 2100 has been reached, and now we're moving on and moving forward. So I would suspect 2135 to 2150. Now we do have non-farm payrolls come out. Any risk event could obviously damper any type of movement to the upside. We are extremely stretched in the weekly and monthly charts without even a 8 or 10% pullback in the last, I believe it's 4 years. So just keep that in mind, okay? I just want to run through the indices just to show you where we are. And you can see we broke up and we just really haven't gone anywhere other than from this low. We rallied for 3 days and then we just and that was the first week of February, right? And then after that we went sideways for 5 days. We jumped up once and then we went sideways yet again. So other than the first week, we've gone nowhere this whole month. So you can't say to yourself, as a trader, there's nothing going. I can't do anything. It's not you. It's the culprit is the markets. The markets are the culprit here. So take a step back and see what happens here in the next few days. Now, if you look at the charts, you could see that this line here has broken resistance, which is now support. Again, very bullish. We are a little bit extended. I would like to see another bull flag make that higher low from this previous low, and then we can excel higher. Okay, but remember, guys, patience here is really important in this type of market. Transportation sector. All right, this is a real big one here. I do like the way now we have broken this bearish symmetry of lower lows and lower highs. I do like the fact that we are above Friday's high. We did close at it, but that's fine. We held that gain, and we need this transportation sector to start moving higher here. It is our leader, remember, okay? XLF broke outside of the bull flag, and now we need to break a little higher, and let's see if we can challenge these highs here, okay? Again, this will help the IWMs as well. Russell doing well. I mean, you could see here since November, it has really gone nowhere, and the bigger picture has gone nowhere all of 2014. So now we're going into the third month of 2015, and it looks like it wants to move higher now. So if that moves higher, another one of our leaders will definitely help equities. Take a look at the diamonds. It is definitely our laggard, but you know what? It is at the highs and doing quite well. We had that little spike up at the end of the day on Friday, and Monday held its gains. Again, another good sign. Do you want to short the market? Absolutely not. You don't want to short the market right now because of the fact it's not telling you that it wants to be shorted. The market looks like it wants to move higher. If the markets were to roll over and start to sell off, you'll have plenty of time to short the market at prices where you will get your confirmation that the market is indeed moving lower. Okay, right now this is not the case. Now, if you're a type of a trader that has experienced the fade, overbought, oversold, then absolutely do whatever it is in your trading plan. But right now, guys, as you can see, markets want to move higher here. Banks and financials looking good. Transport's looking better. Russell looking good above the support area, which is that breakout. And now we have the Qs here. Again, like I mentioned in yesterday's video, really a lot to do with Apple, but still holding all of these gains here, okay? So let's see what happens in the coming days. We have non-farm payrolls that come out on Friday. And remember, mutual fund inflows usually start to take effect on Thursday, Friday, and a couple of days going into the new month, okay? Just keep that in mind. Have a great day, everybody. We'll speak to you tomorrow. Take care.